So KCB Group shareholders are set for a meeting on Thursday, which is tomorrow, to decide on planned acquisition linked up by the bank. And as Dennis Otieno now reports, the decision to acquire a listed rival could give way to similar trends in the sector.
The vote by KCB Group shareholders on Thursday will be critical in giving life to their planned takeover of rival National Bank. But even as this seems like a done deal, banking sector analysts reckon that the deal has awakened interest in the industry and many are scouting for opportunities.
And in some cases, some of the banks are so weak that if they continued in the direction that they were going, the longer-term viability might be questioned.
Currently, Kenya boasts of over 40 commercial banks and a number of deposits taking microfinance. This has most recently elicited discussion on the state of the financial sector.
Consolidation is important. I think there's one element with regards to whether our economy is overbanked, and towards that, there might be a case of consolidation.
In its new wave, KCB Group is also on course to acquire part of collapsed Imperial Bank. On the other hand, CBA Group and NIC are also in the last stages of formalizing their union with a new executive structure already communicated to staff. The new trend said to be music to the ears of the regulator.
We are not done yet. We hope that the banks are also listening to you, and they need to continue looking at their business models and strengthening them as we go forward.
Dennis Otieno, Citizen TV.
So ministries, state departments and agencies have been directed to release pending bills for small and medium enterprises contracted under the access to government procurement opportunities by end of next month. Faisal Ahmed has more.
The decision, sources intimated to Citizen Television, was arrived at 2 weeks ago. This following an assessment that the state of small and medium enterprises in the country hanged in the balance as payment for national and county governments continues to stall.
Cross-match them so that they...
And speaking on Wednesday at the Kenya Private Sector Alliance Suppliers meeting, Public Service, Youth and Gender Affairs Cabinet Secretary Margaret Kobia made known the plans.
The Auditor General has already actually given that report, like almost quite a number are now ready to be paid. And it is the interest of this government, through National Treasury, to pay these pending bills of ACPO by 30th June. Those which are payable are going to be paid.
According to Kobia, priority will be given to businesses contracted under the Access to Government Procurement Opportunity, popularly known as AGPO. Currently, both county and national governments owe private sector players an estimated 350 billion shillings. Out of this, large corporates are estimated to owe SMEs 60 billion shillings. A recent visit by President Uhuru Kenyatta to the Inland Container Depot and subsequent meetings on detained imports are part of the decision by the state to ensure SMEs once again get a footing in a bid to revitalize cash flow in the Kenyan economy. Faisal Ahmed, Citizen TV.
Barclays Bank Kenya has announced a flat growth of 1.9 billion shillings in its earnings for the period ending March 31st, 2019. In a statement, the lender also indicated it had incurred some 243 million shillings in costs towards its rebranding plans from Barclays to ABSA. During the period, loans and advances grew by 9% to 180 billion shillings, attributed to trade and asset financing. Elsewhere, the Capital Markets Authority has approved the introduction of derivatives exchange market by the Nairobi Securities Exchange. A CMA says this follows a successful test run carried out between July and December 2018. Derivatives are financial instruments whose characteristics and value depend upon the characteristics and value of an underlying asset, such as commodity, bond, equity, or currency. Finally, individual tour operators in the South Coast have decried a move by the Tourism Regulatory Authority and the NTSA to have them registered as limited companies. The drivers, most of whom are freelancers, argue that the move is impractical and costly since most are owner drivers. Dennis Otieno, Citizen TV.